To wrap up our Chapter 9 content, we're going to talk about how revenue gets reported and then quickly how you actually calculate the amount of cash you receive from a customer. So we're talking about revenue reporting. We talk about what's on the financial statements. We communicate our revenue activities a number of different ways. And again, financial statements for public companies, this is going to everybody. Financial statements to clients, this is obviously just going to the client. But obviously your income statement is kind of the first point. You've got your net income, and what starts that net income calculation is your revenue. So your net sales go in there. Your uncollectible accounts expense are part of it. They're usually layered into the selling and admin expense if you're talking a public company. You've got your cost of goods sold, things you paid for. And then over on the balance sheet, we can come up with our net realizable value of accounts receivable, which, if you're remembering, that would simply be your accounts receivable asset minus your allowance for uncollectible accounts contra asset. Then on the statement of cash flows, we're going to show how much cash is received from customers. And in a small example, this is easy. You just go to your general ledger and you take a look at all the cash coming in and going out. But if you're Apple and you're receiving billions of dollars a year, you need to come up with a way to estimate the cash you receive from the customer. So you're going to start out with this calculation. I'm going to show you the formula over here, and then I'll show you how to do the T account method as well. So you start out with your beginning accounts receivable. You can find that on the balance sheet. You're going to add your net sales. Again, this piece is very easily findable because it's on your income statement. And that gives you the maximum amount owed by customers. One of the big assumptions we're making from the beginning to the end of this is that every single one of our sales is on account. So we're saying that, look, we made a sale, it goes on account. If no one ever paid us, if we were terrible at collecting, then this is the amount that would be owed to us. Of course, that's not going to be the final amount, though, because we're going to have some cash we receive from the customer. Again, this is usually the calculated amount. And the way we're going to calculate it is by using our ending accounts receivable from the balance sheet. So here's the T account method doing the exact same thing. Over here on the right-hand side, we've got our little T in the bottom right-hand corner. The T that we're going to work with is accounts receivable. Think about it, accounts receivable starts with a debit balance. So here's my beginning balance of accounts receivable. It's going to end with one as well. Here's my ending balance. Every time I sell on account, I am debiting accounts receivable. So technically my net sales are a debit to accounts receivable. I'm debiting accounts receivable, crediting net sales. Every time I receive cash, is the times that I am crediting accounts receivable. So that's your way of kind of checking that out. Well, now let's continue on and actually hit a sample problem here. So looking at some examples, here's one. We'll say we've got the 2020 financial data here. You can see at 1/1/20 we started with accounts receivable of $100,000. 12/31/20 we ended with accounts receivable of $120,000. And then our net sales for the period were $900,000. So I'll start out with the formula method. You can use formula or T account, whichever method works for you. In fact, I'll even put a T up here on the board as well. So let's go ahead and knock out the formula method first. Again, walking through my beginning piece. There's my beginning accounts receivable of $100,000. Net sales of $900,000. So if I never ever managed to collect anything, I'd be owed $1 million. And to be honest, I would be terrible at my job if I never collected payments from customers. Well, I can't just find my cash received, but I can find how much I'm owed at the end of the year. So I can see at the end of the year I was owed $120,000. So $1 million minus my missing number gives me 120. Tells me that I received cash of $880,000, and that's the number I'm trying to calculate. Again, doing the same thing, just using the T account method. Here's my accounts receivable. Again, beginning balance is $100,000. Ending balance is $120,000. Every time I sell, I am debiting accounts receivable, so I'm going to debit at $900,000. So again, there's going to be a missing number over on my credit side. How much did I credit accounts receivable for because I received cash? Again, the same $880 is what makes the math work there. So there's your ways of calculating the amount of cash you received. If you have any questions, please let me know.